Welcome to the Andrew Holland Podcast, where we explore the stories of successful people, get insight and advice from individuals who have accomplished amazing things, and dive deep into understanding ourselves as human beings. Now, here's your host, Andrew Holland.
Hello, everyone, and welcome to another episode of the Andrew Holland Podcast. Joining us today, we have Jason Kruger, the president and founder of Signature Analytics. Jason, thank you so much for joining us today, and welcome to the Andrew Holland Podcast.
Great. Thanks, Andrew. Appreciate it.
So you have over 20 years of business and advisory experience in the corporate world. And in 2008, you saw a market opening or something that was missing in the marketplace. And so you started Signature Analytics. You were working at Deloitte as a senior audit manager, and then you decided to start Signature Analytics. So I want to get into that. But before we do that, give us some insight on what does Signature Analytics do?
Yeah, I think it does relate to my history as well, because what I saw, and even at Deloitte, was companies in the small mid-market that really deserved better as it relates to their accounting and financial infrastructure. And so what I mean by that is companies, as they grow, they start out by looking at accounting and finance, associated with their business as a necessary evil, where they have to, pay the bills, they got to invoice, got to collect cash, make sure they have enough cash to pay payroll, and file their taxes at the end of the year. And what ends up happening is, as companies grow, they realize that they start to feel some pain points associated with not having good visibility into their numbers, not being able to make good decisions based on what's happening in their business and based on the financial side of the business. And then they also need to start providing their financials to third parties like a bank, or they need to have audited financials, or they want to bring in investors. And so what we do is we provide the top talent to the marketplace on a flexible, scalable way. So instead of having to hire a full-time CFO or a full-time controller who could be very, very expensive and who also has one skill set, we want to make sure that you have that top talent, you have that CFO, you have that controller, you have that staff accountant, but you don't necessarily need each individual full-time. And so we evaluate and assess the current team of our clients, and then we fill in the gaps and provide that financial and accounting leadership to give them that visibility as they move forward.
When I hear you talk about accounting and finance, a lot of people's eyes just glaze over. And I think you used appropriate words for it is a necessary evil.
Mm-hmm.
And some people feel that way regardless of how big the business gets. But as we all know, that first year for any new business, and quite frankly, the first 5 years for any new business, are kind of the high watermark. And there are very few, I don't know exactly what the percentages is, 95% fail in the first year, 60% in the first 5 years. A lot of times it's because of the inexperience, perhaps, or the lack of understanding of how important there needs to be, or there's a focus on accounting and financial insights. Has that been your experience when you're working with clients?
Yeah, absolutely. I think, when companies are smaller, they can, the owner, the entrepreneur, the founder can kind of manage things in their head, right? It's not too big. They understand what's going on. They may not have a lot of overhead because they don't have a lot of employees. So it can be kind of managed effectively that way. And that's fine. But as they grow, once they get to that $5 million mark or $10 million mark, then things become more sophisticated and they start to lose track of being able to effectively manage in their head. And so what's most important for smaller businesses, especially, and as they grow, is understanding cash flow, right? So now you have a lot more complexity, you have a lot more transactions, and it's very difficult to manage the cash flows of your business, what's coming in, what's going out, how I manage that to effectively stay in business, but also be able to invest and grow the business. And then the next area is, okay, now even if I can manage cash flow, I need to understand how profitable I am. Or maybe I think I'm profitable, but I don't have the cash flow to support that. And so why is that? And that's very common as well. And then also understanding the margins of your business. You take a $10 million business, a 1% change in your margin is $100,000 that can drop straight to the bottom line, go in your pocket as a business owner. It's also $100,000 you could reinvest into your business. So instead of, we like to look at margins from the percentage point not just a, hey, you know what, we're between 45 and 50%. Well, 5%, that can be a significant number. And we want to always be working to prove that over time. So having that visibility is critical to being able to achieve the goals and maximize business valuation as you grow and as you want, move towards the goals you might have.
Yeah, I think one of the things that you just highlighted that's so crucial and what makes being a business owner so challenging is there are so many areas across the entire spectrum of the business where you have to make decisions, oftentimes 100% of the decision with only 10% of the information that you'd like.
Mm-hmm.
It's just the very nature of going from a small to medium to large size business. As you get larger and you can more cost effectively put in some of that fixed overhead where you can do test marketing and what have you, where you don't necessarily have the benefit when you're a small business, you want to find areas where you can get information, reliable information, so you can make well-informed decisions, so you don't have to just be spitting in the wind and hoping that it works if it doesn't move in a different direction. And
Right.
I think that's one of the areas that a lot of business owners shy away from, the accounting and finance areas, because they're not familiar with it.
Mm-hmm.
So give us specific examples of, let's say I'm a small business, I'm doing $3 million in revenue.
Yep.
And I hear this podcast, I hear Jason, I hear Signature Analytics. I just heard you talk about some generalities of this is what we help businesses do. Can you give us some specificity about, okay, you've got a business, let's just say it's in the landscaping industry. I'm doing $3 million in revenue. My goal in the next 3 to 5 years is to get to $10 million in revenue. I'm not exactly sure on every single job how profitable I am, but at the end of the day, I know I want my net margin to be about 20%. And I don't want to get too wonky into the numbers, but I think it's helpful to have specific examples. Tell us what you do and how you would come into my business and say, okay, well, let's help you do this. Let's help you do this. Let's help you do this. So that moving forward, I can make better, well-informed, data-driven decisions.
Right. Yeah. So landscaping, I'm somewhat familiar, obviously, with that industry. The first thing, we want to understand is what I talked about before is from an immediate perspective, let's make sure we understand what your cash flows are for your business. And what I mean by that is, yes, understanding the flow of cash historically, but let's make sure we can project out what your cash flows look like moving forward. Standard in the industry is a 13-week cash flow, and 13 weeks is basically 1/4 of the year, right? So if you can look forward on a weekly basis, one quarter ahead, and be able to project out what your cash flows should look like, you can manage that cash effectively. And then that gives you the flexibility to then ultimately make decisions with that cash. So if you say, hey, you know what, we have a cash inflow because of XYZ, okay, what are we going to do with that cash? Are we going to take it to profits? Are we going to pay bonuses? Are we going to reinvest that back into the business? So number one is understanding the cash flows of your business. So that allows you to pay the bills and keep the lights on, right? So that's the foundation.
Cash is king.
I mean, exactly. I mean, before you do anything else, make sure you can project out and you have confidence in your cash flows. Once you have that, then you can take another step back and say, okay, now we know that, in effect, we can keep the lights on. So now how do we evaluate our business, and how do we move our business from 3 million to 10 million? And a lot of business owners, their goal is when they start a business, is to exit and have a sale, right? And say, hey, you know what? I want to sell this business and I want to retire, or I want to take these, I want to do this, and I want to do something over here. And so we're always looking at, what does that mean? How do we maximize business value? It's not as easy as just building it up to 10 million and selling it. There might be 2 landscaping companies that are both 10 million in revenue, and one might be valued twice as much as the other for a variety of reasons. And so how do we look at the numbers and say, okay, how is your business valued in the future in your industry? What are the, not to get into too much accounting, geek out on accounting stuff, but a lot of businesses are valued on what they call a multiple of EBITDA, or, net income multiple, or revenue. And so how do we maximize that? How does your industry look at that? And a lot of that is through diversification, margins, how your business is operating and run. And the confidence that the buyer has in your financial information is a big part of that. So how do we do that? And then how do we build a plan to maximize business valuation up to the point of getting to 10 million? And then, so that's, again, long-term goal. And so then what we're looking at then from a landscaping perspective is you probably have most of the engagements might be a fixed projects fee. So it's recurring, but they're fixed project fees. So do we understand the time it's taking our team to produce that, to perform that labor? Are we evaluating when we bid an engagement, how profitable those engagements are or those projects are when we bid them? So having that information helps us to better bid future projects. And also we'd like to understand, okay, what is our goal for a margin perspective on our jobs? And if we have that goal, we can bid to that goal, and we can make sure that we're maximizing the wins that we have associated with the bids, and also the profits on each job as we move forward as well. So then we can create a healthy overall business that improves cash flow, improves margins, profitability, allows you to invest back into the business as needed, and ultimately is improving the business valuation for when you want to exit. And so all of those things go into, accounting is a black hole in a lot of ways, but the fun stuff from a business owner's perspective is really understanding not the debits and credits that, you and I, have done a lot of in our careers, but it's really about understanding, okay, from a profitability perspective, from a job by job perspective, what jobs are profitable, what jobs are not profitable, how can we make them profitable? That's critical. And then the last step is looking at your overall operating expenses and saying, hey, every expense I incur in this business, is that adding value to my business or is it not? And there's a lot of fluff in there and a lot of businesses that can be streamlined in a lot of ways as well. So that's a snapshot. That's a 5-minute overview of kind of how we look at things, beyond just saying, okay, here's your P&L, here's your balance sheet, and go do with it whatever you want.
Yeah, I mean, I appreciate you giving us that snippet but in there is so much to unpack. And what some of you as listeners or viewers may be thinking, why do I care? And obviously everybody knows you have to care about the accounting and finance of your business. But when you start talking about margins, you start talking about cash flow, you start talking about, receivables, what does 210 net 20 or net 30 mean? I like to think about it and take it back to, why are you in business? Mm-hmm. And Simon Sinek, why, the why behind what you're doing. And once you have that question answered, which if you're a business owner and you don't have that question answered, you might want to take some time to take a step back and answer that question. Once you know that, it's a lot easier to talk about the things that you just mentioned, because the only way to accomplish that why, the bigger picture, the more strategic conversation, is to talk about some of these more tactical details that are going to help you, in our scenario, get from 3 million to 10 million. Mm-hmm. And so I love what you pointed out is everybody can say, okay, well, what was your top line revenue on a job? Mm-hmm. If you can't point that out, okay, well, we've got bigger fish to fry. Right. But what a lot of us as business owners, not necessarily deliberately, but because we are being pulled in so many different directions, and that doesn't change. I mean, as you grow, that only seems to happen more and more, where you get sucked into the weeds of the business, where you're still working in the business. But to take it to the next level, to do the type of analytics and to achieve the growth you're talking about, you have to start thinking about the questions you just asked, and you have to start focusing on your business, working on your business instead of in your business. And I think that's the bigger topic that you and I are talking about. Yeah, you need to know the details, but the reason you need to know the details is because you're never going to be able to get yourself out of the business if you don't set up a system in place for other people in your business to efficiently run the business and provide you with the reporting that are necessary. Right. So if you had to pick the top 5 questions, someone's listening to this podcast, they're running a company. They've been growing like mad over the last 5 years, and they've been so inward focused, because that is the very essence when you start a business. And now you're to the point, as you described earlier, where you need to be more sophisticated. You need to jump out of that day-to-day operational role And you need to start being able to analyze the questions and the information that you just talked about so that you can start making more strategic, high-level decisions to accomplish your goal. What are the top 3 to 5 questions they need to be asking themselves
Yep.
so that they can make that leap from in the business to working on the business?
Yeah, I mean, you hit the number one thing is why did you start your business, right? Like, what are your long-term goals? Some people want to start a business because they want the lifestyle, right? And they're happy with a small business and they want to keep running a small business, and there's some flexibility in that. Um,
Wait, Jason, you're telling me they want no money, no time,
right,
no
yeah,
flexibility,
right.
no
Well,
weekends?
that was the second part of
What?
my comment that you cut me off. I was just going to say, and sometimes, you realize that you become a slave to your own business, right? But others on the other side, and a lot of business owners, they started because they want some sort of an exit. There's an opportunity to be, from a monetary perspective, to achieve monetary goals that you couldn't otherwise achieve if you worked for a company, worked for another company. And so understanding why you're doing what you're doing is important. And then the second is, to your point also, is how do I build, if my goal is to grow my business from 3 million to 10 million or and above and more, how do I scale? So it's always about scale. It's always about what I'm doing now, I can't do at 3 million, I can't do at 10 million, I definitely can't do at 20 million. And it sounds obvious and people probably hear it all the time, but starting that process early is critical. And starting to build a management structure and team with layers that you can count on and trust is also critical. I will also tell you right now that nobody will be as good as you are as the owner. It is what it is. Nobody has the knowledge you have. Nobody has the passion and for your business that you have, because it's your baby. Your life depends on it in a lot of ways. So nobody will have that. And so what do? You have to hire good people, and then you have to build good processes to make sure that those individuals can perform at the highest level possible, knowing that it's probably not going to be, as good as you, but you have to be able to step out of that. The other aspect is, if I was looking, the other question I would ask myself is, if I want to continue to grow, do I know, have I educated myself on all aspects of my business? And what I mean by that is, a lot of business owners, they start a business because they're good at one thing. For example, myself, I was good at accounting. I know finance. I started a business in 2008 with 0 employees, and now we're at 75 employees. So there's a different skill set involved with knowing accounting and finance and actually building a business. So how do I do that? I dive into all aspects of my business. I didn't know anything about sales and marketing 15 years ago, but now I know a lot about sales and marketing, and I understand it, and I'm able to lead our sales and marketing team. I don't have to be an expert in it, but I have to understand it, and I have to be able to provide guidance. And so knowing all aspects of your business is so critical. I think I see a lot of individuals say, when they start a business, they say, okay, I'm good at this one thing. And usually it's the operational side of whatever that business is, because they've done it before. And they say, I'm going to bring in some clients. And when I get to a certain level, I'm going to hire a sales guy. And I'm going to hire a marketing guy or a woman or a firm. And then when I get, I'll hire a bookkeeper, and they'll do that. And I can still focus on doing this. And what ends up happening is, even if you hire a good salesperson, without direction, they don't know your business like you do. And they're going to be off doing whatever they feel is best, which may not be aligned with the direction that you want to go, or the types of clients that you want to bring in as a business owner, because they just don't know. And so understanding and giving direction to that salesperson, understanding what are their activities that will contribute to success. Do we have a sales process, a sales playbook, even on how how we drive opportunities in our business. Managing that individual and knowing what they're doing and keeping track of what they're doing and equating that to success is critical. Otherwise, I've seen a lot of businesses hire a salesperson and that person doesn't work out, even though they might be a good salesperson. There's just no direction. They have no direction and they're just kind of hoping for the best. So instead of hoping in your business, you got to create processes and oversight, and you have to know what's happening to eliminate, the hope, right? We don't want to hope that things work out. We want to have confidence that things will work out because we're doing the right things to make those, to achieve the results we want. And, so all aspects of the business is so critical to be able to grow beyond just that small business.
Yeah.
I said a lot of things there. I don't know if you want to unpack some of that, but those are some critical areas as a business owner.
Yeah, I mean, you make a good, hoping is not a strategy. And I think it's easy to just set something to the side where it's an issue, or maybe you don't even know. The most challenging part in anything in all of life is you don't know what you don't know, and hoping is never a strategy. But I want to focus on you because I think a lot of what you just said, we can get relevance and specificity because of the experience you've gone through. You've gone from 0 to 75 employees since 2008, which is tremendous growth. And being Jason in 2008 managing 0 employees to Jason in 2024 managing 75 employees, you had to change, you had to grow. What was the most challenging part of growth?
I think, as probably is the case with a number of people even listening on this podcast, it's taking yourself, how do you remove yourself from the day-to-day aspects of the business, right? So when I started, I was doing everything. I was servicing clients. I was, paying. I was bringing in some contractors to support the work. Now we have all full-time employees. I was doing business development. I was doing sales. I was doing, I was doing everything, right? And then little by little, you start breaking that apart. But even up until recently, because finance and accounting is my background, it's very easy for me to dive in deep with a client and start forgetting that we have 100 other clients also. And so what's the best use of my time? It's not spending 20 hours a week on client services on 3 clients when we have 100 other clients. It's building the right team, the right processes within our team and our infrastructure to make sure that all of our clients are supported effectively and getting the right value. So pulling yourself out of being the main person that all of your clients want to work with because they want to work with you. You sold them, they want to work with you, right?
Mm-hmm.
And so how do you how do you take that transition from, yeah, I sold you, but you're going to work with my person over here? A lot of times like, no, we want to work with you, right? And the way to do that is to build processes to give the client the confidence that it's not all about Jason. Jason's not selling Jason. Jason's selling Signature Analytics. Jason's selling our process. Jason's selling our team, the experience of our team, the value that our team brings to the table. And a lot of that is through how you build out the solution that you are providing to your clients, and being able to show them that solution doesn't involve you and that they're even in better hands without you, for that matter. Right now we have people that have a lot more experience than I have in many different areas where they do a much better job than I would do if I was working with them. And so now it's gotten to the point where I can sell the firm and not sell myself. And so that's the key challenge from being small to being bigger. And you always hear, and I think you even mentioned it earlier, is you want to work on your business, not in your business. That's the biggest thing, is you start, it is building the infrastructure and the team and the processes to ensure that you can remove yourself from working in the business and be focusing on these things that we're talking about. How do I create more profitability? How do I improve cash flow? How do I, what's my sales and marketing strategy? How do I improve that? How do I work with the team on that? How do I continue to build the infrastructure and build the teams to support that? And I will add one thing. I think it was about 6 or 7 years ago, we brought in and we hired a CEO. And the reason is because One, I feel I can always use all the help I can get. And the individual we brought in, Pete, is still obviously with us, and he brings expertise and value from another part of the market, and has been tremendous to be able to free up my time to be able to focus on the areas that I can drive the most value. He's focusing on other areas that he drives the most value to the organization, and it's been a great partnership where we're able to now continue to accelerate and grow beyond where we currently are, and achieve the goals we want. So a lot of it too is ego, right? Like, oh, I'm the owner, I'm the founder, I need to be the boss, and I need to have CEO in my title. Well, sometimes you're not the boss, and the founder isn't the person with the expertise to take you and your company to the goals you want to have. So you can have the part of being the CEO and the founder, or you can have the success of being twice as big as you currently are. So understanding how to get there, and letting go of some of that, ego, and working together collaboratively with the team, is something that's allowed us to be successful.
You make a great point. We see that common in the tech space. I mean, it's in every industry, but often you have founders like Elon Musk who are these brilliant geniuses, but they do not have the skill set, nor do you want them in the position of being the CEO, because that's not where they're most valued. And I'm reading the most recent book. I forget the author on Elon Musk, where he was kicked out of his two companies, PayPal, and I forget what the name of the first one was, something related to X, which is why he bought Twitter and renamed it X. But for the exact reason that you just said, sure, you might be the founder, and you might be the president, but that doesn't mean you need to be the CEO, nor should you be the CEO, nor do you have the skill set to be the CEO. I think another thing that you hit on that is so important, Jason, and it's worth reiterating, is you said building the processes to make your client confident that even though they're not working with the founder or the CEO or the president or any of that, the C-suite, if you will, they are going to get the same reliable customer experience and result as they would with anybody in the firm. And I think that in addition to pride and ego, which is what you talked about, and I think that's such a huge big one for all of us in giving up control. Typically, we as entrepreneurs that start a company, we're kind of control freaks, right? Some of us more than others, but even I have experienced this, and giving that up scares us because, to your earlier point, not because people have malicious intent, no one cares about your business as much as you do. Just inherently, never going to change that. So you're concerned about giving up that control because, well, if they don't care about it as much as I do, what are we sacrificing? So why so many businesses fail to make that leap from, the mom and pop shop to a more medium-sized to large is because they continue to resist that infrastructure and those systems and processes that you need to give your client that confidence and that consistent experience. It's so important. I'm so thankful that you made that point. And for anybody who's listening, I want you to ask yourself, if someone asked you, if you died tomorrow or you were gone for a month, how would your business fare? And if the answer to that question scares you, you do not have the systems and processes in place to get to where you want to go.
Yeah. And you're also not sellable,
example.
Right? So
yeah,
the value of your company, if the value is all in you as the business owner, how do you exit the business and sell it? Right. So one thing we talk to our clients about too is, if you do want to exit and you do want to sell, when we talk about maximizing the valuation of the company, well, the valuation of a company is significantly lower if there's a lot of reliance on ownership, right? And what I mean by that is if everything revolves around the owner and they're driving all of the business and they're overseeing all of the engagements and the projects and the jobs and everything else, there's not a lot of value in buying the company unless that person stays on for a period of time. And even then, it's not as valuable because there's no way to pull that person out of the business. And so to maximize business valuation in a exit or sale, as a business owner, ideally you'd want to be able to create a business that operates independently of yourself. Yes, you can provide the oversight and strategy and so on, but if the business and the operations and the sales and marketing and the accounting and finance and HR all operate independently of yourself, then there's a lot more value in that business.
That's an excellent point, and I think that is often missed as well. And regardless of whether your exit strategy is a sale, no one, if you're not making yourself, well, a lot of people are in business. I think all of us, we want freedom of our time, right? The most valuable thing that we have on this earth,
Right.
secularly speaking, is our time. Well, even if you're not looking to sell your business, if you continue to build your system around you so that you can never be removed,
Yeah.
you're doing the exact opposite of providing freedom of time and flexibility.
Right.
One of the things that I think you can speak to a very high degree of relevance, given your background. You were in the corporate world for over 20 years. You were at Deloitte. You were an auditor, a senior manager in the audit division. And you and I are both CPAs. I worked at Ernst & Young. That is an industry. Number one, the corporations are huge. Deloitte, one of the big four. That is very regulatorily involved. And they have lots of systems and processes and what I'm going to call bureaucracy. And the reason a lot of people start their own business is because they hate the inflexibility, the bureaucracy, the politics, the corporate ilk. I'm saying that negatively, but everybody knows what I mean by that. And now here they hear you and me saying, well, we got to build in those systems and processes so that you can grow. And what some people interpret that is, and it can very easily become, is the inflexibility, the bureaucracy, the thing where you have to go through 5 steps just to make the right decision for a client. So tell me this, for our listeners and our viewers, how do you find that balance between putting in the systems and processes, which are necessary to accomplish, but a lot of people try to avoid because it makes them think that we're going to become a bureaucratic behemoth that can't be flexible and can't do the very things I want to do, and the reason I started the business, versus having those systems and processes that are doing exactly what you need them to do to get to where you want, but they are not making you an inflexible corporation.
Yeah. Yeah. I mean, I think you said it pretty well. I think, for us, it's, we want to hire the best talent. We want to hire the best people, right? We don't want them to be robots, but we have to give them a foundation to be successful and to create consistency in how we service all of our clients. So if we just hired one person that's great over here to the right, and we hired one person who's great over here to the left, they may service clients completely differently, and we lose control over that. And ultimately, then you lose control over what's really how you're servicing any of your clients. And so that is also not a good feeling to have. So we want to make sure that we have good processes in place, but we also have to give the team the flexibility to be able to leverage their talents effectively, to be able to provide the value that we hired them to provide to our clients. And then that also comes down to culture of an organization and what type of culture we want, right? So culture is critical, and culture is a lot more than just going to happy hour, right? Or doing stuff like that. It's the culture of the organization, your people, what, what their passions are, what they're looking to achieve personally with their career growth and even their family life. So building a strong culture goes along with that. And then that then in turn supports the efforts and the processes that you're developing as you continue to grow. So I know what you mentioned is, the corporate world, the red tape, all that stuff. A lot of that is just bad culture, and it doesn't really have to do with the processes in place, or the processes were developed through just a bad overall culture of the organization. You can have larger companies that have the right processes in place, that have a great culture that people love to work with and work for. So I think a lot of that goes back to the culture of the organization and the value that people feel working within your company.
That's such an excellent point, Jason. It is not the systems and processes that create bureaucracy and red tape and that feeling of being trapped. It's the culture and or systems and processes that were developed in a poor culture. So I appreciate you making that distinction, because I think it's a very important one for people to remember. When people hear systems and processes, they think red tape, bureaucracy, but they're getting it conflated with no, systems and processes inherently unto themselves are not bureaucracy or red tape. It is the culture in which they are being built or operated in that would turn those into bureaucracy or or a claustrophobic environment.
Yeah, I mean the reality is when you look at one, I think important comment here. When a business owner looks at starting a business, if they're only looking at their own personal goals and lifestyle, and looking at hiring people as just pawns to do the work to achieve the goals that they have, it's going to be very difficult to achieve the goals you have. It's all about bringing people in and thinking about what their needs are and their challenges are and helping them to be successful in creating that culture. And it's something that a lot of individuals don't think about when they start a business. They think, oh, I'm going to start a business and I'm just going to hire people and they'll do this stuff. But there's a lot of effort that goes into building a strong culture so that the team is bought in and wants to work with you to achieve the goals that you have. If you don't have that, and that you have pawns, then you're going to have high turnover. People aren't going to do their best work. You're not going to be able to recruit and get good talent. It's just be a constant challenge.
Yeah, I'm glad you said that, because, focus on the human, give them direction, focus on the human, the rest will come. For you at Signature Analytics, what are 3 or 4 things you've done to really emphasize or highlight that culture and that focus on the people who are helping you take Signature Analytics where you want to take it?
Yeah, in fact, it's changed a lot since COVID, actually, right? So um, we used to have physical office locations. So we had 4 physical office locations where we had, teams would go to. And so a lot of the culture was built around the offices, right? And getting people together and doing things. That's one side of culture. During COVID and through COVID, we decided to save on real estate costs and let those leases expire. So now we're mostly a fully remote company from that perspective. We still will go on client sites in some cases, but most of our clients are we work with them fully remote, and we can do that. And so what I didn't realize until we brought in somebody that had such strength from an HR perspective is the value of HR within an organization and the culture that it brings. And what I mean by that is um, we brought in a very strategic director of HR who was able to build the behind the scenes foundation as to ensure that our team felt that they were supported. They had direct lines of communications to a manager. We revamped our entire uh, process around evaluating our team and um, uh, quarterly reviews and how our compensation structure and all of that to ensure that the team felt supported and had a place to go to ensure that they were supported internally as well. In addition to that, um, we, from an HR perspective, it's really about understanding the goals and leveraging Signature Analytics as a platform for career growth and development of our team. So how are we going to bring in the top talent? We have to show them a path to continuous growth and development within the organization and within the company. And so we have different levels. Every level is outlined as far as what the responsibilities are, what the expectations are, and what is needed to get to that next level, so they can start to chart out their own career path. And our company has the unique ability to provide a lot of different experiences to our people, because we work with all types of different companies, all types of different industries. Some individuals like to work with nonprofits. Some individuals like manufacturing. We have a big division within construction. We have a lot of clients that are supported by private equity. So we have clients all over the board, and so we try to leverage what they want to know and what they want to learn with their skill set to provide our clients the best value from that perspective. But at the same time, our people are working in areas that are really exciting to them. And so that's all about culture and making sure that, when you bring somebody in, they have an understanding of their career path. And we celebrate people that have been here for 5 or 6 years that leave and move on, because in today's day and age, 5 or 6 years, to have an employee for 5 or 6 years is a pretty good accomplishment. And now they move on, and they've leveraged and used us as a stepping stone to leverage themselves to bigger and better things. And now they're in the marketplace promoting us at the top level. And so that's all part of things that we want to develop within our organization, to do that. Last month, for example, this coming month, we have a challenge. We give everybody 8 hours of a year of community service. So we have a challenge in this next month of, who is going to be doing community service and where are you going to do it, and let's track that, right? And so those are fun things that we can be doing to give back to the community. Last month, it was about getting together. We got people all over the country, but we had little pods of people. So there was 40 different events that happened last month where people got together and did some things. So some of it may have been 2 or 3 people getting together for coffee, where it's more informal. Some of it would have been a little bit more formal. Some of it would have been online. We have monthly company updates. We'll do other monthly we'll do other events kind of online based. But all of that counts towards culture and getting people involved and connected. And in a virtual world, getting people connected is critical.
For all of those listening who think a fully remote company can't create culture, I think you should re-listen to the last 5 or 6 minutes that Jason just described, because he just laid out the roadmap of exactly how you can do it and be successful. And it's working very well, Jason. There's no doubt in my mind. I love that you had 40 little micro events across the country as a part of, sure, you're fully remote, but you can still get together from time to time and build that team. Same thing with the community service idea. One of the things I've heard you say throughout this entire podcast, when you're talking about your business, is you are bringing people in to take your company to the next level. You talked about bringing in an HR director or director of HR. You've talked about bringing in a CEO. My question to you is this. There's often in business a time where it's the chicken or the egg, okay? When you bring in people, and the right people, they're expensive. And sometimes you have to bring them in to get to where you want, but you don't feel whether that feeling is well-founded or not based in the numbers that you can afford them. And other times you're doing really well and you think you can afford them, but maybe you can't. And so you're always, as an entrepreneur, making this decision. I know I need to bring in the right people. I know that if I'm going to bring in the right people, it's expensive, it's costly. And so we, especially for you and me as analytical brains, and I think this is the case with all business owners, we're always thinking about the bottom line. We get trapped in that, how much is that going to cost me? How much is that going to cost me? How much is that going to cost me? And of course, you need to take that into consideration. But how do you, and for you and your business and Signature Analytics, which came first? Did you have the revenue so you could hire this incredible, amazing talent? Or did you say, you know what? I got to take a risk. I know I can't get to where I need to get. So without hiring this amazing talent first, give us some insight there, because that's something every single business owner goes through.
Yeah, that's definitely a challenge. I think there's a couple of things. One is, every expense you do incur, there should be an understanding of that's an investment, right? And so that investment, what are the goals and the results you want from that investment, and what's the timeline that you should start to see those results, right? I mean, a lot of times, building the back office, building the accounting and financial infrastructure is an investment, because you've had a bookkeeper, you've grown, you promoted that bookkeeper to a controller, but they're still really a bookkeeper, right? And they don't have the sophistication to take you to the next level and give you that visibility into the business. So now you need to invest in bringing some higher level of sophistication to accounting and finance. We feel like we're a solution for that. But even if it's not us, you have to invest. You have to invest by, paying more out of your, own pocket or out of the business. But what are the results that you're going to get from that, and why will that add value to your business? So understanding that is critical. I think the way that you could go both ways. I mean, it depends on a couple things. One, if you have investors or deeper pockets, you can make the investments before you have the revenue. That being said, I've seen a lot of companies make those investments and, blow it all quickly, and then they're in the same place, right? So that again is where the financial side and the strategic planning come into place, is understanding when I do make this investment, what does that mean, and what is that going to produce for this organization? I can tell you, and what I alluded to before, a bad investment is just saying, I'm going to hire a salesperson, and I'm going to hire them, and I'm going to pay them 200 grand a year, or 100 grand plus, commission plus whatever. And I'm going to hire a salesperson, and they're going to just go sell my product. If you don't have, if there's not a process to provide the oversight and work with them to define their activities, what they're doing, how they're successful, and building that from the bottom up, I've seen 9 times out of 10 that not be successful. And so when you do make an investment, you have to understand how it's going to be successful versus just that hope we talked about before, which is, I'm going to hire someone and they're just going to do the work and they're going to do a good job. Well, not if they don't have the right oversight and to be successful. So that's one. So even if you have the funding, there's got to be a plan, and there's got to be an outline of what that means and how that means success. With a salesperson, especially, when you hire a sales individual, you have to understand how the numbers work to ensure that they're going to produce the results that you think they're going to produce. If you hire them and say, wow, they're going to bring in $1 million this year. Okay, well, how did you get that, right? You got to build that from the ground up. And that's a critical component to understanding the success of a salesperson. When it comes to hiring other individuals within the organization, then it comes down to really understanding your cash flows and the knowledge of your business. If you don't have the funding in advance, you still want to make sure you have that planning and it's strategic planning in place to know when you can layer in a new person and what that means to the organization, and ensure that the profitability of the business will cover their costs and that investment will pay off over time. Knowing when that investment pays off is also important. The last thing that's the most challenging for business owners is how much they want or need to be paid, right? So in the early days, I was paying myself either not at all or very little. I was fortunate to have a wife that, was able to support, and no kids at the time, to support our lifestyle, or minimum lifestyle, I guess, to be able to get this started. And so I took very little out of the business, but I did still take some. And so then the investments we made were based on the minimum that I needed to take out of the business for us to be successful. And so we did build up the revenues. And once we build up the revenues to a certain point and the profitability to a certain point, I decided, okay, I'm ready to hire our first full-time employee. And then we continued to go. And then, our business it's recurring in nature. So we could forecast and project out the need to then hire another full-time person. Once we built that base up far enough, we started to then hire and bring in somebody that was involved with sales and business development. And then we continued to build that way over time. And that takes a long time. If you have opportunity to infuse more capital, that can accelerate that. But again, if you just infuse capital without a plan, that's going to make things very challenging. So again, the planning and the forecasting associated with those investments is critical for the success that you'll have as you move forward and make those investments.
What do you think, in your experience, and all of your experiences, not only within Signature Analytics, but with your clients, is the hardest position to hire for?
I would say two things. One is the sales and business development. and I'm biased, but accounting and finance, because like we talked about before, it's a black hole, right? You're a business owner
Yeah.
and that's not your background. So you hire somebody and you hope for the best, you hope they're good. And some businesses, they get lucky and they feel that they know what they're doing and they hired a great person that can do great stuff. And others, they don't get lucky and they end up having these challenges. And so if you have somebody you can talk to and that has a background in finance or accounting or a mentor or a business coach, that is so critical to involve them in the hiring process of looking at the resume, talking to the person, understanding the goals that you have for your organization or your company. So those are critical. Sales and marketing, same thing. These things can be a black hole for business owners, thinking I'll just hire somebody and they'll do the work. Whereas in fact, the real challenge is hiring a good person, but then setting them up to be successful. So those are very challenging areas to hire. Usually on the operational side, the individual that started the business, that is their expertise, and so they know who to hire. They can hire good people. The challenge then from there is building that beyond themselves, like we talked about earlier, from a process perspective. But usually that is the most comfortable area to hire for a new business owner.
So I want to focus on sales because that piece is so crucial to any business growth, and it very much impacts everything we've talked about. And that has been my experience as well, that because the founder is wearing many caps, but the one that has to be there to be successful at the very beginning is the sales side. Otherwise, how are you going to grow revenue? Because most people don't have, as you said, hundreds of thousands of dollars to spend into marketing campaigns, whether it's TV, radio, flyers, internet, Facebook ads, yada, 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 yada. And you grow organically because of the sales nature of the person starting the business. When you go to sales people are a dime a dozen. Good salespeople are the rarest gem to find. In listening to what you've said and reading between the lines, is it fair to say that you've had successful experience there that was built upon less successful experience there? Meaning you hired someone, maybe this happened a few times. It's happened to me many times. So I speak from experience as well, where it didn't work out. And through that failure, you learned what you need. What advice can you provide to people so they don't have to go through those one or two or three failures of hiring salespeople that you and I have likely gone through, and just give them advice so that they can find the right salesperson
Yeah,
that is going to be that rare gem that they need to grow their company?
yeah. As you would suspect, I've we've had challenges too. We've made some bad hires, right? It happens. At the
I think every
beginning,
entrepreneur has.
yeah, at the beginning, the thought process was, well, let's just bring in, we created a structure where we were going to expand out into different markets and have market leaders, and we were going to try to hire a bunch of Jasons, right? And then you realize that there is only one Jason, right? Like if there was a bunch of Jasons, then everybody would be doing this, right? And so that wasn't very successful, and those were expensive individuals as well. Uh, that was also before we had really developed a good sales process, right? Now we have a sales playbook. A few years ago, we spent 6 months and invested a lot of funds and money into building out and hiring a consultant to help us build out our sales process, sales playbook, etc. Over time, then we were hiring more generalists, people that had relationships in the market, but weren't tied to a specific industry. And so we get a lot of our business from referrals, as you can imagine, CPA firms, bankers, attorneys, other service providers. We get a lot of referrals from those service providers. So who had a strong network in within the service provider network, and sometimes that's difficult to tell from a that's difficult to determine from an interview. So you hire someone, you realize they don't have the network you thought they had. So that's one challenge. The other is understanding the level of talent you need. Some businesses, uh, they can develop a very strong strategy with with individuals that have limited experience, lower cost, dialing for dollars, those types of things. Others, like ourselves, we thought we needed very high end uh, business development individuals that can speak directly to the CEO of companies and business owners. And so they were more experienced, 10, 15, 20 years of experience in business development, had a strong relationship within the community that they were in, and they were able to, speak to at the executive level very effectively. And what we've found is some of those still were successful and some weren't. A couple that were not successful, we had been searching for, like you talked about, that gem and that diamond in the rough. I think one of my colleagues says purple squirrel, or unicorn, and we couldn't find that person. So then we ended up settling on two other individuals. And at the moment we settled, uh, I knew within the first month that this was not going to be successful, right? So now we just wasted another 6 months, and we hired two people that were not going to be successful. So then we had to shift even more. And what we've started to do more recently is, instead of hiring generalists, we've started to break out our segments of clients and industries that we service. And now what we found to be most successful is hiring people that are really dialed into specific industries, that have strong, deep-rooted relationships in industries like construction, we talked about, which have a nonprofit arm, where we have a very deep nonprofit um, client relationships. And so we've hired and are hiring a person that has strong relationships in the nonprofit community. So instead of spreading ourselves a mile wide and an inch deep, how do we dig it deeper? Because it is about that strength of relationship and the trust that we can develop with the prospects and with that community, that will allow us to expand even further. And so those are a lot of trial and errors that we went through. But again, we also now have a process that our team can follow on what allows them to be successful. We can manage them. We can evaluate their success based on the activities that they're doing. We know that X number of meetings a month with the right people should produce these results. So we can measure their success against that. And that was all built over time, of course.
One of the things you said is, and in listening to some of the challenges that you had in hiring salespeople and thinking about that and the experience that I've had, and I want you to opine on this. What I have found is, regardless of the industry, regardless of the specific growth goals, or where you're, whether you're in a service industry, can be in a product-based industry, a goods industry, there can be people that have great relationships and they're that type A personality and they're outgoing. But at the end of the day, and this is where I've seen the most challenging personality trait to determine from an interview, and until you actually see this person working, they're not a closer. They just can't close the deal. They don't ask for the business. And for me, that's probably been you can have everything on paper, and you can have the personality that is considered a sales personality, and you can have all these community and business relationships, but they're not a closer. How do you ascertain that? Number one, has that been your experience? And if you think about all the failures, they simply weren't a closer, meaning they weren't comfortable. It's not who they were. That's a big thing. Ask for the business, expect the business. Closing is the art of the deal. That's what separates all of the hundreds of thousands of salespeople from that purple squirrel, as your colleague would say it, is the ones that are closers. They have to have all that, and they can't be pushy salesmen, and they can't be slimy, snaky, gross salesmen, but they got to be closers. And that's a very fine balance. Has that been your experience, and all of the areas where you failed, they simply weren't closers?
Yeah, I think in a lot of ways. And I think a lot of that too comes down to, do they have the respect of the people they're talking to, right? And so what most people think about salespeople is that they're the they're the outgoing, very talkative. They can talk to anybody, all this stuff. But if they can't gain the respect of the person or people they're talking to, and they're not able to dig below the surface, and they're just kind of talking, then they're not going to gain the respect. They're not going to be able to close the deal. I actually saw a speaker a couple months ago. I saw a speaker a couple months ago that actually showed on a study that showed that introverts actually are more successful sales individuals than extroverts. And the reason is because they are better listeners, right? They listen to their clients' needs better instead of talking over them. They build a stronger rapport and relationship and trust better than an extrovert might in a lot of ways. So the ability to listen and build that deep rapport and trust with the client is what allows you to and do that, in a fair, over a period, whatever that sales cycle is critical to being able to close. You might be able to bring someone in, but if you're just all talk and you're not going deep into if you're not going below the surface and you're not building that trust, that is that's why people can't close the deal a lot of times. And so if they can't, they may be good at bringing opportunities to the table, and that person still may be valuable to your organization. Maybe you have somebody else that supports them that is able to build that bigger, larger connection to close the deal. One of my colleagues who is one of our executive VPs, he oversees about half of our client portfolio at the top level, and then he's got managers below him and so on. He supports the close process in a lot of ways, and he is an introvert, but he's confident. He knows how to speak effectively to the clients. He builds that trust. He builds that rapport. They trust him. They want to work with him and the team. And he's fantastic, and he has the trust of everybody on our team and the client. But when you get him in a group of 20 people, everybody's talking over him, and he doesn't get a lot to say, right? But when you talk about one-on-one with somebody, he's going to build that trust and rapport better than anybody.
I think everything that you just said there is something for a lot of owners to think about, breaking out of what that caricature of a real rare diamond in the rough salesperson is. Society, as you said, thinks they're extroverts, but maybe that's actually the exact opposite. And that study that you pointed to, I'll have to go out and look for that. I want to conclude here because you've given us so many incredible things to think about and points of interest that we can all learn from as owners. So we thank you for that. I want to conclude with your expertise and diving a little bit into the weeds, but not so far that we're all confused. Going to numbers, the accounting and the finance side. Setting aside industry, and I recognize that every single industry has what we call KPIs, key performance indicators. So taking it on a more broader view, not going industry specific, but take us there if we need to. What do you think are the top 3 to 4 KPIs, key performance indicators, that every business owner needs to be focusing on a daily, weekly, monthly, quarterly basis?
Yeah. There's got to be some level of KPIs around cash and cash flow. So obviously we talked about that. Know your margin.
Give me a specific one.
Yeah. So I think when you talk about the flow of cash, so how many days how many days is your cash stuck in receivables, right? So if you're and that basically talks about how far extended your receivables are, and if they're extended and you have 3 months worth of revenue stuck in receivables, you're not collecting quickly or effectively to be able to manage your business. Same thing with AP. Ideally, you'd like to extend AP further than what your receivables are so you can collect the cash before you have to pay the cash out, right? So the other is if you're manufacturing, inventory turn. If you have what I always talk about, and I have a great story on manufacturing, is I talked to a client or a prospect one time, and they said, "Hey, look at this. Look at P&L or income statement. They said, look at how profitable we are. We're making a couple $1,000,000 this year, but I have no cash. Like, where is all my cash? I can't even operate my business. And I said, well, there's two things here. One, your numbers might not be accurate, which is actually, with who I was talking to and looking at it, was a high possibility. You may actually not be as profitable as you think you are. And that's a whole nother problem, because then you're paying taxes on profits that you actually didn't even earn. And the other is, let's look at your balance sheet. Let's look at your inventory and your AR. If you're manufacturing, your cash might all be in inventory. So it's cash you have on the shelf. So we want to have enough inventory to be flexible to ensure that we can take the orders that we are getting, but we also don't want to have 6 months of inventory on the shelf unless there's a very, very good reason for that. So managing inventory levels is critical, and inventory turn is critical for a manufacturing company. And knowing what your industry average should be, and what makes the most sense for your business, and being able to manage that is critical, along with the AR. And then margin, not just gross margin as a company, but gross margin by service line or product line. That allows you to then determine which product lines or service lines to be pushing out into the market more. If you're higher margin product lines, higher margin service lines potentially, and also what service lines and product lines that you can work on to improve the margin over time. So again, when it comes to a business, you got to know your margins, because the margins then allow you to cover your fixed costs or your operating expenses, your sales and marketing expenses. And then ultimately that then drops straight to the bottom line. Everything else staying equal, if you improve your margins, you've created excess profitability for your business to be able to do a lot of things with. Reinvest into your business, hire a key employee, or put it in your own pocket as a business owner. Pay yourself more. Those are critical components. There's so many different metrics around, margins and how to manage your margins that are critical to a business.
I appreciate you highlighting those. And for those listening, if you don't know the answer to those questions, you should take a look at your business. And, kind of what we started out with, for us, we could wonk out on accounting and finance all day. But for those who maybe don't realize the importance, what I will tell you, if it's not your bailiwick, find someone who it is, because there is a beautiful dance and a beautiful relationship between the financial statements of any organization, the cash flow statement, the income statement, and the balance sheet. And the more you can understand that dance, and you just alluded to it, between that relationship between the income statement and the cash flow statement and the balance sheet, the more truly understand it, the more, number one, you'll appreciate it, and it won't just seem like some archaic or complex, confusing financial situation or picture. And the more you'll realize how the decisions you make on a daily basis, weekly basis in your business flow through to the ultimate success of the organization as determined by the financial statements, which ultimately determine the success in you accomplishing your why, and why you're in business, and why all the people that are supporting you are there and what they want to accomplish. And how I always like to talk about it, cash is king. We've said that. The cash flow statement is one of those statements I think every business owner needs to be looking at a minimum on a monthly basis. On a minimum, I love to look at it weekly. And I'm not just talking about, of course, the ins and outs of the bank account, but the cash flow statement. And there's plenty of software out there, and I'm sure this is what you help your clients do in real time, because you're focusing on putting in the systems in place so you can make real time decisions, well-informed decisions. Now you have to have the closing process every month and what have you. Cash is king, cash flow statement. But so much of our society, and we still see this with public companies, and it baffles my mind, and all the earnings on Wall Street is a focus on the short-term income statement. And I always like to think the income statement is your breathability factor. It's how long can you survive short-term, you need to breathe. But the real powerful statement of your organization is your balance sheet. That is your survivability factor. That is, do you have the fortification within your balance sheet to withstand any storm or tempest that may come your way? And we saw the entities in 2008 that could withstand it. We saw it in the early 80s, all of the crashes. The ones that survived and the ones that didn't, there was a dramatic difference. Those who focused exclusively on the income statement, poof, gone. Those that had always had that long-term view on the strength of their balance sheet. And again, this might be a little bit wonky for people who aren't in the numbers. And that's why I say it's such a beautiful dance. And people are going to think you're such a loser for saying that, but it really is once you understand it. And it opens up the whole world as business owners of it connects the whole thing. It connects every single piece in a business when you can start to understand the beautiful relationships between those three statements.
Yeah, absolutely. I think the balance sheet is, I talk to a lot of business owners and they say, well, I only look at the P&L or the income statement, right? Their P&L and income statement are the same thing. I only look at that because I want to know how profitable we are. So, okay, great. Well, the first thing I always look at, it, like you said, is the balance sheet, because that really tells you the true health of the business and the viability of the business moving forward. The other thing that's important to know is if the balance sheet is not accurate, your income statement is also not accurate, very likely.
Yeah, great point.
So if you're only relying on the income statement and you don't care about the balance sheet, and you don't know if the balance sheet is accurate, and it probably isn't, then your income statement is not accurate. So the information you're looking at is not going to be accurate, especially as it relates to, like I talked about before, manufacturing. Inventory can be a black hole. If inventory isn't accurate, your cost of goods sold is not. Inventory is on the balance sheet. If that's not accurate, your cost of goods sold on the income statement is not accurate, which means your margins are not accurate. Your margin percentage we just talked about, which then ultimately means your net income is not accurate. So how can you run a good business without having that confidence that that you have good numbers? You can't, and then you ultimately end up paying too much in taxes. You think you're more profitable than you are, and a lot of challenges happen. So the balance sheet is a critical component. It is important to understand the basics of it and what it means and how it interacts with the income statement, for sure.
Yeah, and that's an incredible point, Jason, that we often look past garbage in, garbage out. So if the data, we're always focused, especially in this world of AI, data. Well, data unto itself is meaningless garbage. If that data is not comprised in such a manner that it can give you useful information, then it's pointless. And that's to your point. If the data on your income statement and your balance sheet are, well, if you're not looking at a balance sheet and that's garbage and your income statement's garbage, to your point, especially in any inventory-based business, manufacturing, it's so crucial to understand the COGS side of things. We've covered so much. It's clear to me. Anybody listening, if you you need help, you need to talk to Jason. If you are that business that is, small to medium and you're growing, and I want to hear from you, Jason, what is kind of that ideal client range when they should be thinking, I need to get Jason involved? Because obviously there's got to be a certain level. If you're at 100,000 in revenue or $1 million in revenue, that's fantastic. You're still growing. Maybe you're not quite there where you need that next level of sophistication. But where's a good time for clients to be reaching out to you, and how can they do that?
Yeah, a lot of it is the mindset, right? If you have goals to grow to over $10 million, and you've started your business and you're starting to hit that trajectory, I would love to talk to you, because that's where as you move towards that point, you start to outgrow the sophistication and the team that you started with. And so there's a lot of discussions we had on how you take that next level. So we usually get involved with companies when they've gotten to that $3 to $5 million mark, potentially. We have a lot of clients though that are 10 million to 100 million. We have some clients that are, we have a lot of clients that are at that 20 to $30 million mark, and they start to feel the pains of how, from getting there to getting to that 50 to 75 to $100 million mark, right? So I think that a lot of it is the mindset you have. If you have a mindset of growth and you're starting to feel those pains of not getting good visibility, or you're trying to get bank financing and you're not having successful conversations with the bank, or you're having to provide information to third party. You're having the bank, maybe you do have financing, they're requiring audited financials or reviewed financials, and that's been a challenge. Those are all red flags that, hey, I don't necessarily have the right people or the right processes within accounting and finance to support what I have going on right now, let alone giving me the visibility to achieve the goals I have as I move forward. And so, our sweet spot really is companies that are heading towards 5 million and then upwards to, even 100 million is really our sweet spot.
And they can reach out to signatureanalytics.com, correct?
Yeah, signatureanalytics.com. You can email me directly, the letter J, Kruger, Kruger, at signatureanalytics.com. I'm on LinkedIn. Feel free to reach out to me that way. I really just enjoy talking to business owners. If I can help them, that's great. If not, I usually know somebody that I can point them to.
That's fantastic.
I'll just tell them to go back to you. For all of your... Point them in your direction. I mean, you have a wealth of knowledge as well.
Well, we really appreciate the conversation. I've learned so much just in listening to how you think about and the approach that you take with your clients. As we conclude here, is there anything else that you'd like to share with us that we haven't already covered?
No, I mean, I think, we covered a lot. I mean, again, to me, it's know all aspects of your business. For companies that grow, the leadership team really knows every aspect of their business, and they have a plan for success in every aspect of that business.
Well, aptly said. Jason, thank you so much for joining us.
Great. Thanks so much, Andrew.
Yep. Have a great day.
Thank you for listening to the Andrew Holland Podcast. Never miss an episode by subscribing to and liking our YouTube channel, the Andrew Holland Podcast, and by following and liking the show on your favorite audio platforms. Be sure to connect with us on X, formerly Twitter, A Holland Podcast. That's A Holland Podcast. So you can interact with Andrew, the team, and our guests throughout the week. Thank you again so much for listening. Have a great day, and we'll talk again soon.